Let me now solve another question as it relates to the same contract account. Okay, question 2. This second question, it will provide a more deeper knowledge as it relates to contract accounts because it has a little application unlike the first one I solved. Okay, let me now read the question out to you, our dear followers. The question is from the following particulars. They told us that we should write up contract number 5. You know the first one we solve is contract number 50. We should write up the contract number 5 account and that we should find the value of the tender, that is the contracted price. Okay, they gave us the materials used as $30,000 and the productive wages as $25,000 and also the direct expenses, which is $500. So in our additional information, they give us that we should they provide 60% on productive wages for works overhead and 12.5% on works cost for office overhead. So profit to be realized is 15% on the tender price. Fine. Let's now go to the solution of it. All right. So the material that was used in the contract is given. Let me rule first. We are preparing contract account, contract number 5. Contract number 5 account. Okay, let me roll it. Okay, the materials that was used is giving us as $30,000. Anything I said it in the first question too before solving it. Anything that like material they use in the contract, it will have to appear in the debit side of the contract account. So material used. Sorry, let me rewrite this. So material used $30,000. Of course, we solved that first one. And the next one is the production wages. The wages of that is attributed directly into the production process in the contract. So to production wages, and it is $25,000. And also they give us our direct expenses. Everything like they spent, it will be in the debit side. Direct wages, $500. Okay. The next thing in that question is overhead, that is the works overhead. This works overhead has a simple adjustment that we just have to do on it. Okay, work overhead. This work overhead is they give us additional information on it, and additional information is that they give us 12.5% on work overhead. So that 12.5% we are going to use it on our production wages. It will be 25,000 multiplied by the 60%. The breaking down of 60% is 0.5. 0.6. All right, if you multiply 25,000 by 0.6, you are going to get 15,000. So the 50,000 is free to come here. 15,000 is free to come here. The addition of that material that was used, the production wages, the direct wages, and the work overhead, if you plus everything, we are going to get 70,500. 70,500. And this 70,500 is the work cost. All right. And this work cost, of course, is the addition of the previous items that is attributed directly into the contract account. Okay, these are our work costs. In that additional information they give us in that question, they told us that they, they provide 60% on productive wages for works overhead. We did that one. And that 12.5 percentage on works cost for office overhead. Of course, this 12%, we are going to charge it directly into the amount we got for the work cost, which is 70,500. All right. So for office overhead now, to office overhead, to office overhead, uh 70,500 multiplied by 12.5%. If we do this on our calculator, we are going to get 8,812 points. $8,812. $8,812 is what we got in that. So if you now plus this $8,812 with $70,500, that is where we are going to arrive at our total cost. To get our total cost now, the addition of this 8,012 and 70,500 will give us 79,312. All right, that is our total cost. The next thing for us to do is to get our profit at tender price. It is also given for us in that question. And for us to get it, this 79,312, we are going to use the percentage of 15%. God, come on now. The 50% that they gave us in the additional question of the profits to be realized, we are going to use it for this total cost in order to get our tender price. Profit at 15% on tender price. So to get our profits of the tender price, the 15% of the total cost is what we are going to use. 79,312 multiplied by the percentage of 15%. If you break down the 15%, it's going to be 0. Sorry, let me clear this. 0.015. Okay, if you do that on our calculator, we're going to get 13,966. But before we apply it like that, let's do it in this simple way. $79,312 multiplied by 15% all over 100. Of course, that's the standard measurement for percentage, minus 15 percentage rate that was given also. So if you do that, that is when we are going to see the real value of our money, which is 13,996. All right. Every item in that question is what we have gone through. So let's now total our work. $30,000, 25, 500, 15, 79. All right, if you can do that, we are going to arrive at 93,308. Okay, that's the total for us in this our debit side. And in the credit side, if you can notice in the credit side, we did not post anything as it relates to it because it is not given in the question, but it cannot be empty because if you leave it empty, the rule of our trial balance is not being met. All right, so that total amount, which is $93,308, we have to bring it into our credit side also, and that will be the tender price, I mean the contract price, which is how much? 93,308. All right, and to this, we've come to the end of the lecture on contract accounts. Thank you guys for watching. If you can gain a little on this course, remember to subscribe to LearnCity. Thank you for watching.